At Numerian Capital, we bring you the latest stock news each day. Please like and subscribe so we can bring these articles to you each day. Thank you. Today, January 20th, 2023, CEO David Michery just received 33.87 million shares of Mullen stock. He also transferred 1.45 million shares to an unknown recipient. Mullen Automotive CEO David Michery received 33.87 million shares as part of his CEO Performance Stock Award Agreement. He has now received 141.76 million shares as part of the agreement since September. Shares of Mullen stock are down by about 15% year to date. Shares of Mullen Automotive, Nasdaq MULN, stock are in full focus this morning following the submission of a Form 4 by CEO David Michery. Yesterday, the electric vehicle company held its special meeting of stockholders. At the meeting, the preliminary results showed that shareholders voted to approve Proposal Number 1 and Number 4. Proposal Number 1 is a reverse stock split amendment in a range between 1 for 2 and 1 for 25, while Proposal Number 4 seeks to issue $150 million in notes and up to $190 in additional shares of Series D preferred stock. The final results of the meeting will be disclosed in a Form 8-K by next week at the latest. Mullen also decided to adjourn the meeting in regard to Proposal Number 2 to provide shareholders with more time to vote. Proposal Number 2 seeks to increase authorized common stock to $5 billion from $1.75 billion. CEO David Michery receives 33.87 million shares. The Form 4 shows that Michery received 33.87 million shares on January 18 as part of his CEO Performance Stock Award Agreement. These shares were awarded at $0 apiece. The day before that, Michery transferred 1.45 million shares to an unknown recipient as part of a settlement agreement dated June 28, evidenced by transaction code J. Following the award, he now directly owns 111.91 million shares. Michery has an extremely generous CEO Performance Award Agreement. Since September, he has received a total of 141.76 million shares, which includes the recently received 33.87 million shares. In fiscal year 2022, he received a salary of $721,154, a bonus of $750,000, and additional stock compensation worth $4.89 million. That marked a massive increase from fiscal year 2021 when he received a salary of $409,485, no bonus, and an additional stock compensation of $1.97 million. Michery's CEO Performance Award Agreement. During the 2022 fiscal year, Mullen reported $0 in revenue, so what exactly is Michery receiving performance awards for? The CEO Performance Award Agreement was enacted on May 5 and highlights a series of milestones, such as Mullen being added to the Russell 2000 Index and Mullen entering into an agreement with a company that sets the company or its vehicle apart from its competitors or that provides the company a first mover or first disclosure advantage over its competitors for the feature. The agreement that sets Mullen apart from other companies is titled the Feature Milestone. On September 1, Mullen signed a partnership with Watergun that will equip Mullen vehicles with technology that can produce fresh drinking water. Michery received 44.88 million shares for satisfying this milestone. Shares of Mullen stock are down by about 15% year to date and down about 93% from a year ago. New petition calls for Mullen to fight short sellers like Genius Group. 35.8 million shares of Mullen stock failed to be delivered last month. Genius Group has formed an illegal trading task force and now Mullen Automotive shareholders are asking for the same. Shareholders have created a petition with more than 2,300 signatures. The concept of failure to deliver is a highly controversial topic in the financial industry. Failure to deliver happens when one party in a contract fails to deliver on their obligation, whether it be shares, options or futures. In the example of shorting a stock, it can occur when the short seller does not own all or any of the shares at the time of settlement, therefore defaulting on the obligation. This could result in the creation of phantom shares, which may lower the price of the stock. Yesterday, Genius Group announced that it had formed an illegal trading task force to investigate market manipulation and naked short selling. The team will be led by former FBI Deputy Director Timothy Murphy, who is also a director of Genius. Following the news, shares of Genius Group stock skyrocketed higher by over 250%. In the past 5 trading days, Genius Group stock has returned about 500%. Today, Helbiz announced a similar measure, stating that it would create a comprehensive action plan to investigate illegal short-selling practices. Now, Mullen Automotive shareholders have banded together to create a petition against market manipulation and illegal short-selling. At the time of writing, the petition had over 2,300 signatures. Mullen stockholders petitioned to investigate naked short-selling. The new petition asks Mullen and CEO David Michery to create a task force against market manipulation, similar to how Genius did. In the comments of the petition, shareholders are adamant that something sinister is going on. In particular, they reference dark pool trading in the ignorance of the U.S. Securities and Exchange Commission. According to Fintel, a total of 35.8 million shares of Mullen stock failed to deliver in December. The volume of shares that were unable to be delivered rose substantially during the end of the month. Retail investors are unable to enact a failed to deliver scenario, although market makers and broker-dealers can. In addition, not all failed to deliver scenarios are conducted with ill intent. The SEC notes that human or mechanical errors or processing delays can result from transferring securities in physical certificate rather than book entry form, thus causing a failure to deliver on a long sale within the standard settlement period. Still, the shareholders have spoken, asking Mullen to investigate the failed to deliver behind Mullen stock. The company has not yet responded to the petition. Dear Mullen stock fans, mark your calendars for January 25th. This may be the calm before the storm. Shares of EV manufacturer Mullen Automotive suddenly skyrocketed late Friday. Management punted a share expansion proposal to next week. Mullen stock faces increasing criticism across multiple avenues. During a final push by the major indices to end Friday on a high note, Mullen Automotive showed Wall Street how it was done, skyrocketing to a double-digit gain. It's not entirely clear what caused the change as up until 2:00 p.m. Mullen stock posted a relatively muted upside. Still, a contributing factor could stem from an adjourned meeting to recommence on January 25. Earlier this week, anticipation mounted regarding a special shareholder meeting that occurred on January 19. Centrally, as Investor Place writer William White mentioned, the meeting sought to discuss 2 putative stockholder class actions filed against the electric vehicle manufacturer. Essentially, the lawsuits allege that Mullen had no right to raise its outstanding share count back in July 2022 during the annual meeting of stockholders. As well, yesterday's special meeting focused on a reverse stock split proposal. According to a report by Law, Mullen in an investor relations call revealed that it approved the split. However, another line item billed as proposal number 2 to increase the authorized share count from 1.7 billion to 5 billion, could not reach a decision. Therefore, the company postponed the decision until Wednesday of next week. Fundamentally, Mullen cited the need for clarification regarding the aforementioned stockholder class actions. The Court of Chancery, located in Mullen's state of incorporation of Delaware, will likely side with either the EV upstart or the plaintiffs. Notably, the hearing is set for January 23, leaving a few anxious days for Mullen stock. Confusion and concerns run deep against Mullen stock. Irrespective of what eventually materializes for Mullen next week, many investors have lost patience with Mullen stock. For one thing, while the reverse split would raise the Mullen share price above $1, it's possible that investors will view the action as a cynical attempt to stay listed on the Nasdaq exchange. Further, as regulatory agencies such as the U.S. Securities and Exchange Commission and the Financial Industry Regulatory Authority state, seasoned companies rarely initiate reverse splits. Typically, such actions stem from the domain of low-priced, high-risk ventures, an accurate description of Mullen stock. Another problem that both Law and Investor Place contributor Dana Blankenhorn point out is that Mullen desperately needs cash. Unfortunately, as a pre-revenue enterprise, short of incurring additional debt, the company must issue new shares of Mullen stock. Of course, such a move would only dilute the value of existing shares. Further, Law's David Schultz noted that the really wild thing here is that the reverse split doesn't impact how many shares Mullen can issue. Therefore, even if management decided to reverse split at 1 for 10, Mullen could still increase the number of authorized shares to 5 billion, if the vote passes and the courts agree this is all legitimate. Why it matters? Schultz also warned that Mullen's intended actions may spark unintended consequences for Mullen stock. Short interest often increases following a reverse split as well. If that's the case for Mullen, we could see the stock shorted back into the penny range all over again, the author wrote. Interestingly, data from Fintel noted a conspicuous increase in this very metric. On January 6, the short interest for Mullen stock was 10.83% of the float. Later, on January 19, the short interest bumped up to 14.11%. Thanks for watching. Numerian Capital News. Please come back tomorrow for another stock news update. Thank you.